What's going on, traders? Thanks for tuning in today's YouTube video. My name is Darius, and as I promised yesterday, I'm going to give you today a new update for the EURUSD and the GBPUSD. Yesterday's analysis, I explained to you that I expect both pairs to go crazy to the downside so that they're going to follow this correctional structure. But the fact is that the GBPUSD went up higher and hit at my stop loss. It's not a problem. EURUSD is still on the run on EURUSD. We took in Osaka yesterday a new trade and we're floating currently 4R in profit, which is crazy, super nice trade setup. And I'm going to go through this video, through the setups, explaining you all the reasons why we should still short both pairs and where we can look for the next big opportunity. Now guys, before I'm going to start off, just a quick check over here on my YouTube channel. Don't forget to subscribe and to turn on the notification bell to not miss any new updates like this one over here. That will be super important for you because this is something which you need to see immediately the video, because if you look at it later on, you will miss some opportunities. And here in the description down below, you will find the link tree to join my public Telegram channel, my inner circle, and also my trusted broker. The thing with the broker is super important because there are a lot of scam brokers out there. There are a lot of brokers with high fees, high commission, and trading is a hard business, right? Don't just use a bad broker to make your life even harder, okay? This is just my approach. I'm 2 years with that broker, super happy with it. See you then right now in the analysis, guys. I would say let's get started with the EURUSD. Now the thing here on the monthly is still the same, right? We are still in that bullish environment. The reason why we're in the bullish environment is because of the market is printing those higher highs and higher lows. Okay, currently we're still at that higher high, okay, that higher low over here. That means if we are going to pass this low over here, then we can expect EURUSD to go down lower, right? Then we can definitely expect EURUSD to give us a movement like this to the downside before going probably afterwards again up higher. So I explained to you this kind of scenario already in my last YouTube video. And here, just to sum it a little bit up, we got an area of monthly demand. This is where the market is exactly from here rejecting it all the way to the upside. And the reason for that reaction on this level of demand is also because of the market needs to give us a little bit of correction based on this impulse. Now we are here in the monthly environment, which means on the monthly it is not necessary that we're going to go up that high, okay? The reason for that is because of that thing over here should be an impulse, okay, or a correction, and the market doesn't need here to do some retracements. Here it was a little bit different. Here you had that impulse, so we wanted to see the market going down to one of our retracements, and in this case we wanted to see the market going down till the 0.5, and as you can see, the market tapped into that 0.5 and immediately rejected it to the upside, but then it went lower. Okay, this is not a problem, but as you can see, it gave us reaction and also to the 0.382, and also here on the 0.618, and also right now at the 0.786. So those FIB retracement levels are super powerful when it comes to trading them. You can trade them in a short-term perspective from the lower time frames, and you can really rocket a little bit to the upside with pretty nice risk to reward ratios. Okay, but right now the key is that we do not expect the market to give us a retracement till the 0.32 based on those bearish candles over here. But what I wanted to see is a retracement based on this impulse that we have over here. So as you can see, the market is currently at this level of resistance, a structure level / supply area. And exactly at this area, so I'm talking about the 0.32, we got the 0.32, right? So this is a confluence of resistance and supply. So a lot of confirmations for the market to go from here to the downside. And as you can see, the market already reacted to it a little bit, and this is why I do expect that the weekly candle right now should give us at least a movement till this candle over here. This is what I do expect. If we're looking right now on the daily, you will see that exactly around that candle you got some structure level. But from a daily perspective, I still expect the market to go a little bit lower to test this level of demand. As you can see from here, the market started a pretty nice movement, and we definitely would like to see the market going back to the downside to it. And right now, look at this. The market already is approaching that AMP pattern, and I already explained to you in the last video that whenever EURUSD is doing a structure like this, strong movement to the upside, giving us afterwards a bearish pin bar, okay, to illustrate us the market is ready to move to the downside. Me in the inner circle, we took an entry around that area, but that setup failed. But this is not a problem, guys, because we know around this area we should go for a short, because we got a high chance that the market will drop down till this level. So we have right now a plan, a trading setup plan where we can gain 22R on this trade. If this movement over here will bring us all the way till that level, we're going to make 22R on just one trade, and we only failed one of this. So this is super crazy, guys. This is why I'm super curious, and this is why I'm also trying to short it again and again, because we never know what kind of price action confirmation the market will really give us. For example, look at this, that was here a nice reaction to it, and I thought about, okay, EURUSD will be ready to drop to the downside. But in fact, it just created another movement to the upside to hunt all those stop losses, because a lot of retail traders are also looking right now to short EURUSD, but because of the fact that the market went up higher, right now retail traders are looking to buy it, and this is where we can take advantage of the whole situation, because we are going to still short it, and we're going to target the liquidity that is exactly located over here. Okay, so I'm going to put that X over here for liquidity, but we're going to have a look right now from the lower time frames. Now, just look at this. The market could give us right now that AMP formation, and that will bring us all the way to the downside. Probably a correction followed here by another, probably a strong movement, a strong impulse followed by a correction, and then for the completion. That's definitely a possible scenario. Let's see how it will really develop right now. Let's have a look right now on the 4 hours first. Now look here, in the 4 hours, we got that, kind of a rising wedge, kind of very weird structure, looks very similar to that movement over here. As you can see from a market structure perspective, you have over here that low, not a low, it's here the start of the structure, higher highs and higher lows, right? This is something like this, and then the market is providing you another strong movement to the upside, boom, like this. Then this structure is a little bit lower, exactly like this one over here, then it will give you another strong movement all the way to the upside to this area of supply. This is exactly what the market did again to that area of supply, and then it dropped lower, and right now we got a high chance that the market will give us a movement like this, breaking above, and then boom. Okay, something like this to trap a little bit more retail traders during this movement over here. This is kind of my approach right now. This is what we can see currently from the 4 hours, so I'm going to take this as well as a confirmation. Let's go to the even lower time frames, the 1 hour, because look here, the thing is, retail traders will look at this market right now like this. We went lower, look at this, so we got previously here that head and shoulder structure over here. Okay, that was the first thing that we've seen on the EURUSD. That is, from my point of view, high level of liquidity. This is why I even shorted. We shorted it in a circle from here, okay? Because it could have been the start for the strong movement to the downside, but it failed, which is not a problem. Really, it's not a problem, because the chance was super high that the market from here will give us the movement to the downside. And this is why, yeah, we do not trade that head and shoulders super regular like everybody's doing it. We're just starting the movement from the right shoulder, okay, anticipating that the market will target this liquidity for that stronger movement to the downside. And sometimes you've already noticed it on your charts if you're a long term trader, if you have your experience, that this head and shoulder pattern doesn't work every single time like it is explained in a textbook. And this is why I'm always trying to already jump into the right shoulder, because if I can jump in that right shoulder, I can make much better risk to rewards and the compression if you're doing it with the normal textbook example. Now let's have a look here. The market went up higher, giving you higher highs and higher lows, and then at this point retail traders were looking, okay, probably we're going to go short, okay, but then the market rejected over here at this low. It rejected this low. Now this low is, from my point of view, again an area of liquidity, and the market from here started again a stronger movement higher, and it even passed that previous high. Now this is not a problem, okay? If you know, this is not a problem, but most of the retail traders don't know that thing. And this is why they are currently trying to buy. And if here retail traders are trying to buy, then we have an advantage, because then the market will go down lower. This is how the market works, okay? So let's see. From my point of view, because we got those two levels over here, those two liquidity levels, I expect the market to just simply smash through them. Okay, I already explained to you multiple times how liquidity works, how stop hunting works, because exactly here below that areas retail traders are buying, and this is why we're going to just smash through them, through their stop losses. We're going to take their trades and we're going to profit because of we're going to go through that. That's going to be my trade. 1 to 22 hour. I'm going to show it to you when I'm going to close the trade. And guys, let's see. Then I would like to continue with the GBPUSD from the monthly time frame. Here what we can see is that this market is overall right now in a bullish environment. Okay, we got also here those higher highs and higher lows, stuff like this. Everybody knows that. Right now we're looking for that higher low, so we would like to see a correction. Based on our Fibonacci retracements, I would like to see the market going down till the 0.5. Okay, this is what I expect at least. Probably even lower. We could easily test the 0.618 as well. But my first target is definitely the 0.5, because at the moment when we're going to hit that 0.5, I do expect the market to give me another correction. Okay, so look here on the structure, you can see it pretty nice. We got impulse, correction, and then here the market consolidated a little bit, and I explained to you at the moment when the market has closed with the bearish movement over here that the market should continue to move down lower. But look here, the market has done right now 50%, something like this. Okay, not even 50% retracement, which is not a problem. The market could go right now still till that 0.5, a little bit below, something like this. Here in that area, I expect the market to go up higher before dropping afterwards lower. So this is right now my new approach on the GBPUSD. I expect something of a deeper correction right now to go up higher, to hunt more stop losses, more liquidity, because the market was strong moving to the downside. And this is also something where psychology, just imagine retail traders are looking on the GBPUSD and they have absolutely no clue what to do, okay? And then they see the market going down lower, and then they're just thinking of, okay, I'm going to short it. And if this is going to be the case, then this market will spike up, okay? And this is what the market did yesterday. Too many retail traders were shorting GBPUSD. Now we, and the inner circle, we had a pretty nice entry, but still our setup failed because of the liquidity was not over here. Look at this, market already went that much to the downside, and our entry was around this area over here, and we were in a nice profit, but we came all the way back to it, to our entry, and it was a break even. It's not a problem, but right now, guys, due to the structure has changed a little bit, we have a very high chance that the market will give us a little bit of a deeper retracement before this market will crash crazy to the downside. Because right now we got another source of liquidity, which is exactly over here. Retail traders have bought a market over here at this low. Okay, that's a normal level of support. Now also all the way through this candle, retail traders were buying the market. This is the reason why the market already gave us that deep correction right now, because with this movement to the downside, a lot of retail traders are out of the market. Okay, the reason for that is because of, like I explained to you already, whenever the market is moving to the upside, retail traders will immediately execute their long positions. Okay, and with this strong movement to the downside right now over here, their trade is gone. Stop loss hit, or even account was blown off. And right now, look at this. We got another interesting level a little bit above here. So I'm going to take this a little bit like this. This is my 4-hour liquidity level, and we got another 4-hour liquidity level a little bit above. Now, I'm looking right now, because of the market has broken some structure. You can see broken here some structure, and we already started a strong impulse to the upside, as you can see. Okay, sorry guys, a little bit fails right now on TradingView. Yeah, look at this. The market has started from here, strong impulse followed by a correction. That means right now we have a high chance that the market right now will go about around this level over here. Okay, you have the chance to go till this level, or probably even lower to test this one. Let me take the fib retracement to see where the market could potentially go. Yeah, exactly those two levels, where's the 0.5 and the 0.618 located, and afterwards the market could go up higher. This is kind of my approach right now. I expect the market to go a little bit higher before dropping afterwards lower. Of course, it's also possible that the market from here will reject it all the way to the downside, because that was a strong level of supply as well, and it could easily bring the price from here to the downside. That's definitely a possibility, but it's not absolutely necessary. Based off this whole impulse right now, let me switch back to the daily. I'm going to explain you something. You got this impulse. You can see that the market is currently retracing the 0.32. Now you still got two more levels to go. We could see the 0.618 or the 0.5. Those are my two key levels right now where I'm looking to short the GBPUSD. One of those two levels will bring it definitely to the downside. Okay, let me switch right now even the lower time frames, like the 1 hour. Right now it really looks like the market is setting up for that strong movement to the upside, because right now here above this area there is again a lot of liquidity located, or a lot of retail traders looking for a potential short setup when the market will came to it, that we're going to short it again. This is a historical resistance level right now because of so many touches, but this is something good for us, because right now we got the chance to also look for a buying opportunity. Okay, I don't recommend it if you don't know how to trade this. Okay, if you're new to this trading industry, or if you're not that professional trader already, then I definitely recommend that you should wait for the market to come to one of those levels that I mentioned already, and then to look for a short setup. Otherwise, it will be a little bit too risky from my point of view, because going here long, would mean you should really stick to your stop loss and your trading plan, because otherwise you will not be profitable. This movement over here is super risky, but still I expect it due to the liquidity. But keep in mind, we also have liquidity here and here. So we got on both sides liquidity, and the market needs right now to decide, okay, what kind of direction are we going to use right now? Where is the more liquidity located? Should we spike up to grab this liquidity and then to go down lower to grab this liquidity? Or should we just crash to the downside to only hunt this liquidity? Okay, this is how trading really works. So nobody's telling you that thing over here, that the market is only moving by liquidity, so everything is driven by liquidity, and you should always rethink in your mind, okay, where should I attack? Okay, what kind of possibilities do I have? What kind of key levels I have where I could potentially execute my trade? Where should I put my stop loss? At what kind of point is my setup invalid? Okay, right now I'm looking for the buying opportunity, and I know when the market is going to approach a potential level over here, I'm not interested in holding that short anymore, because I know, okay, this market will just crash down. Okay, this is how it works. So let's see. On GBPUSD is a little bit different. difficult right now, so this is why keeping an eye exactly on those two levels would be definitely the key level. As you can see right now, this whole thing is just looking like a strong impulse correction and ready to move up higher. We also broke a lot of structure levels, but the thing is, we didn't close above this structure level, and this is why this movement to the upside is not confirmed yet. Okay. Yeah, basically that's it for this video. I hope that you're going to trade safe. Hope that you could take advantage of this new knowledge that I shared over here with you. And I would like to see you then, of course, next time in my new videos, guys. See you then. Bye bye.